What's up guys, it's Harry Haas here, and today I'm going to be doing a kind of special video on volume analysis tips and tricks. This is probably the most requested topic that I've got in the last month or so, so I just kind of went ahead and did it. I know that Joe has a video on this. Austin also has a webinar on this type of stuff, so you can go ahead and check their videos out as well if you have any more questions after this one, and as always, you can always message me in chat. I'm not a financial advisor. This is not investment advice, even if it seems like it, purely for educational, entertainment purposes. So without further ado, let's get into this video. So basically for this video, I kind of broke it up into different types of volume that I look for, different types of setups, different types of plays that I look for, and how you can kind of use volume as a clue. And I think the main thing that I want you to take away out of this video is that, none of this stuff is the holy grail. It's all kind of used as an indicator in conjunction with the lines, in conjunction with the type of float, in conjunction with how the stock is trading, the setup. So it's just kind of a mixture of psychology, the setup, where people are trapped, kind of stuff like that. So for fader volume, it's kind of the stock is feeling heavy. Every pop, they're selling into every pop. It's making new lows. It's doing big but decreasing volume. We're getting that kind of weak feeling. We get a slam candle, usually under death line. Longs are trapped on the stock. So I've already kind of made a video on the faders that I like to avoid, why I avoid them. But I just thought that I would kind of just include this, so I do have this in the video. You can check out my other video as well. So this one, MEIP, this is one from this week where we had the stock pop and just immediately we got this fade. It ended up testing 3 again. That 3 line was kind of like a major story throughout the morning, and we ended up getting this fade. And a little bit of kind of things you can take out of this is that we do get this kind of initial pop. Obviously, everyone who bought here and didn't sell into these pops is stuck, and we kind of got this fade and so on. But you can also notice from the volume down below how we are doing big volume, but the volume is consistently fading, and the volume is really reflecting the price action here. And this kind of 2.8 line was really key, and after it broke the kind of death line, yes, we did get a pop above it, but that pretty much tells me that the stock is weak. So this is not something that I'd really want to be trying to play, down here or over here, because we noticed that consistently throughout the day, although we do get a little bit of kind of stuff move action into 3, we do for the most part just kind of get a fade. And so basically what you can take out of this is that we have decreasing volume, we have fading volume, and the times where we are getting a lot of kind of volume, we're getting a stuff move and it's going back to normal. So that's just some things I wanted to take out of this one. This one as well. This one's kind of a little bit of a true kind of fader volume where we get that push and then we get this immediate fade all day. You notice the volume's decreasing, and the volume decrease is also reflected in the price. And I think that's very important, is that this type of decreasing volume is the price is really reflecting the volume, and the volume and price are going hand in hand and stuff like this. And that's kind of what I look for if the stock is fading, and I see this type of price action, I probably won't touch it, and I'll be looking for another hot chick, another hot play, something else, rather than trying to be in stocks that are fading. But I'm just kind of using this as an indicator. So if you were trying to get long at 7, let's say, and hoping for a bounce maybe to 8 or 7.5, you'd say to yourself, well, by the time it reached 7, I'm noticing that the volume is fading and so is the price. So maybe I want to either use smaller size or be cautious. And that's just something that I wanted to point out. This one, CAPR, another one. I already have videos on all this type of stocks to avoid and stuff like that, so this should be no surprise that this is a stock that I'm kind of looking to avoid. We noticed that, dried up volume, illiquid, and the stock is also fading, not much going on here. I will get into kind of the zombie volume that I look for later, but I mean, basically we get this stock that pops and just kind of falls, and by the time we get, down here, everyone who bought up here is now trapped. We're seeing that the price is reflected in the volume, volume reflected in the price, and we're just getting this fade. So this is probably what the video is going to be more focused on, is the consolidation squeeze volume. And this is basically when a stock is kind of consolidating near its pre-market support, where it should have broken down, where the volume is drying up but it's still holding. It's an easy way to kind of trap shorts, because what people are thinking is that is stuff like this, where wow, it's lower volume, so that means if we're not getting low volume, that that the price has to drop. If there's no volume, then that means the price has to drop. And people start to get comfortable in these ranges, long or short, because it's giving you and it's allowing you more times to make decisions. Whereas if it's a very fast moving stock, you have a lot less time to make decisions, and people are more emotional, kind of the more volume that is traded. So basically, it's just they kind of drop the volume off. So people are thinking, it must drop. The stock is usually trading in a smaller range or a tighter spread. And, the stocks usually have a fast crack, so it doesn't give shorts a great opportunity to get in at a good average. And they usually have a fast crack, but they're not really under the death line yet. They need to be still alive enough to be tradable. I think this is a very kind of discretionary decision, but they need to be still alive enough to be tradable. And what you kind of need to be thinking is, where are the shorts feeling safe? Where are the shorts afraid? Where are the majority of short sellers short? You need to be asking yourself this question as a long trader. And it's really important that you're always kind of thinking, where's the other side going to be? Those are questions that I'm always asking in my head. Are longs trapped? Are shorts trapped? Is it under death line? I'm asking myself all these questions. So when they do kind of dry the volume up, it gives them a little bit of a chance to manipulate, because what they do basically, what I've found is that, they'll kind of cut the volume off a little bit. People are expecting it to drop, and then we kind of get that boom, like surprise, and we end up getting that squeeze. So it kind of gives you an opportunity to just kind of think about it. So without further ado, let's get into it. So this one, PSTI, these are all kind of recent ones that I've seen, where basically the difference between this stuff and the fader volume and the fader patterns, which I'll get into as well, is that after this slam, there are a lot of short sellers that are thinking, well, after this slam, it has to be done. But it gives longs kind of a good opportunity and a good chance to be able to get long and kind of capture a move like this. And the clues that you can kind of use in a stock like this, along with the volume, is that we kind of, price and volume go hand in hand. So we're going to be trying to use the volume, and we're going to be trying to use the price together. So what we see here is that obviously we get this low after this kind of bigger death candle. We get this pop, which is natural after a stock makes a move like this. So we get this kind of low and this pop, and then we get kind of another type of like kind of low, but it fails to break down again. And in this case, it's like, okay, well, maybe it'll break down. But then we kind of get this other one. So we're noticing that obviously the lows are getting higher and the highs are kind of getting lower. So people are kind of thinking to themselves, well, the stock should break down. I mean, it's done this massive candle. There's no way that this could even squeeze or give us like a 50-cent move to the upside. There's just no way, is what kind of people are thinking. But we notice down here that the volume is decreasing, but the stock's kind of trending higher. And that's a clue that I kind of use, is that, okay, we're getting less volume, so it's easy to get this kind of manipulation like down here. But it kind of says to like, I'm kind of thinking to myself in my mind, like, okay, like if we're getting lower volume, shouldn't the price be going lower? And that's a time where kind of the volume is kind of telling you, like, okay, we're grinding higher, we're doing a little bit lower volume. We know that it's easier to manipulate when the stock is doing a little bit lower volume, and we get this type of candle. So that's kind of a clue. We also know that if you're a short seller, you're probably short from this area, and you're probably a little bit more comfortable because you're saying to yourself, wow, the volume is kind of drying up down here. I'm not saying that that every time you see this type of action is going to work. Like obviously, it needs to be used in conjunction with the lines, with the price action, and it's really kind of a case by case basis. But I'm just going to be going over some of these types of traps when they do use the lower volume and when they do kind of squeeze. So it's really interesting to kind of note that we notice that the volume has kind of dried up. I mean, this is the lowest volume that it's done in this kind of half-hour period, and we get this manipulation type of squeeze right afterward. So it's just something to be aware of. Here we go again, where we have this drop at the open, and what we notice is that the volume has dried up yet again. And what's happened? I mean, if you're a short seller, you don't want to get short right here in case it goes to like 10 or 11, but you're going to be a lot more comfortable when the volume dries up and you notice like, oh wow, this should be breaking down. It's doing less volume, but the price action is if it had have went lower here, that would have kind of told you, okay, like the stock is going lower, confirmed fader. But the problem that we have here is that we got this volume that decreased and it ended up going higher. So just something to note again is that most of the short sellers would have been short between $8.50, $8. Maybe the good ones would have gotten in at 9, but we do notice that they use this lower volume to trap and manipulate, and we get that higher move. So if you wanted to be really safe, I guess you could have bought this kind of dip in around here and said to yourself, well, all the $8.50, $8 short sellers are trapped, and you could have captured some type of move in around here. I'm not saying that you're going to capture a $9 to $12 move on this type of action every time. It's just something that you need to kind of be aware of, where you can use this type of volume and use this type of price action to kind of give you a little bit more of an edge. Here we have it again, where we get this kind of drop out of the open. This is more of like a dip and rip type of setup as well. And we get this drop out of the open, and we get this right here, we get this kind of lower volume where the volume has dried up, and people are thinking, okay, well, this needs to go down to 2.5 to 2, it's over, the play's over, all the longs are stuck. But unfortunately, most of the short sellers are short between 3.5 and $3. So when this gets above 3.5, when this starts to show this kind of lower volume, this is the move where it's like, okay, it's either going to drop here or it's going to squeeze. And in this scenario, it ended up squeezing on this type of lower volume, and we got that push to $4 stuff, and then back down to kind of where it came from, I guess. But in this type of scenario where we have the lower volume and the stock's grinding lower and lower, that's a time where it's like, okay, the volume is really tight, kind of reflecting the price action there. But in this type of scenario, when we're getting this lower volume, I mean, this should have dropped, but instead we had this lower volume for a couple minutes and we got this push. This one right here, this one I'm not really a fan of, but I wanted to include it just to kind of show that sometimes if we're kind of getting this, I mean, we got, let's say we got like 30 minutes of action where the stock had just been kind of grinding, doing no volume. Volume started to pick up, and we ended up getting this type of squeeze. I mean, if you're short in this area, expecting that no one's looking at it, that's why it's so dangerous to be short in this 475 area, because it is kind of a coin flip. I wanted to include this one because I wanted just to show that I mean, with this lower volume, even right here, I mean, this stock should have broken down. And it's these times where stocks should have broken down. It's these times where stocks, when it should happen, when you're looking at the volume saying to yourself, okay, well, this thing's got to drop now. I mean, the volume has been cut off. If there's no volume, obviously there's no one buying it. So obviously the stock needs to drop, but it ends up being a little bit of kind of a coin flip, I guess. So you need to be really careful because these are situations where they can really manipulate. This one as well, DPW. This was also a recent one too. I know it kind of got a lot of people, where people kind of expected this one to fade. I think it was an easier borrowed stock. I mean, I was avoiding it at the open. I was saying to myself, like, this isn't a stock that I really want to be in at all. And for good reason. I mean, this stock is going lower. But then when we kind of got this type of lower volume, you can notice kind of what they do multiple times in this type of stock, where what they'll do on these dips is they'll cut the volume kind of off. You notice that this is kind of the lower volume. You're looking at this saying, okay, this is going to be a fader, going to be a fader. And maybe in this particular situation, maybe it is kind of a coin flip because you kind of get this stuff move and you're saying to yourself, okay, the stock is done, it's done. And we kind of get this volume where it's kind of cut off and we get this spike. Then we get this dip right here where the volume again is like kind of cut off and it's dipping lower and you're saying to yourself, okay, like the volume's cut off, it must be done. There's no way that I can long here. I mean, I obviously it needs volume or it needs this or it needs that. Volume again kind of dried up. Boom, we get that move to the upside again. And we kind of get it again here where the volume has just been dried up and we get this kind of candle. So I guess what you can do is just kind of use it as an indicator and indication with your setup. I mean, obviously this isn't the holy grail or anything like that, but it's just something that you can use in the back of your mind along with your plan, along with the lines, along with everything you know for your knowledge to use it as another indicator. And that's all it is. It's just multiple factors, multiple indicators lining up. Again, this one I'm also not really a fan of either. It wasn't a stock that I traded, but I just thought that I would mention that, again, what happens? We get this this dump, we get this, like, I mean, if you're short, like, obviously you're not going to be shorting into 1.5, you're going to probably be short into 1.4, probably some people are short into 1.3, and we get this volume just dried up. And on this type of particular candle, you're kind of saying to yourself, okay, well, this is the time where it should dump, but instead it doesn't. And we get this kind of creep back up and it gets kind of pushed up to 1.6. And I mean, that was pretty much the trade on this one where we got this push back up to 1.6, 1.7 area. And this fade back down, obviously. But it's these times where the volume is kind of dried up, where something should happen that you can use it to kind of capitalize. This one as well. This one's also another interesting one, APOP, where in this type of area consolidation, we notice, again, the volume has just been cut down to nothing. And a lot of people who are short are saying to themselves, okay, well, the volume's done. We should be getting a dump now. This is what should be going on. And it takes people by surprise and goes higher. And I guess the reason is because, again, they're just kind of cut the volume off, make people think that the stock can't go any higher, and it ends up being like a type of volume trap. And so if you're a short seller or you're a long trader, again, you can kind of use this type of price action to capitalize on and just I guess make money off it. I mean, it's just something in conjunction. Like we noticed this kind of support area at 3.5. We noticed that 3.5 is holding. We noticed that it hasn't broken down. So when it starts pushing to the upside, that's when you can kind of go in and take some with a stop under kind of 3.5. It's a type of strategy that you can use as another indicator kind of with your lines. It's not just like every stock with low volume is a stock that we're going to go in and long. Again, it's just another type of indicator. And I'm saying this a lot throughout the video because I don't want everyone to be just longing stocks where things have dried up. It has to be a part of your plan, and it has to be a part where you say to yourself, okay, I'm going to kind of use this information as well as the lines, as well as my thesis, as well as what I'm thinking to make money. This one again, it's an interesting one as well, where we kind of get this action where the stock pops. Obviously, we kind of got that halt in the morning, and right here we notice that the volume has kind of dried up, and we're consolidating. It's very similar towards APOP as where the volume has just kind of dried up, and we get this move to the upside, and it happened here as well, where again we kind of get that dried up type of volume, and then we get those candles, because right here when this volume is kind of dried up, you have a lot of people who are shorting. Maybe they're just short the spike, who are comfortable expecting the stock to go down $1 and expecting a fade lower. And unfortunately, it's just kind of manipulation, and it ended up going a lot higher. And again, on these ones, it's really kind of like a case study video where I'm just kind of going over these type of low volume squeezes, and it's really up to you. There's two different traders. There's the type of traders that want to enter right at $4, and where they see kind of the lower volume and they want to enter at $4. There's the type of trader who kind of needs that confirmation, who maybe wants to enter on a bit of strength once their thesis has been confirmed. And it's really up to you and your personality. Some people love to buy weakness. I know Austin. Austin is the type of trader where he's very disciplined, but he waits for the right moment and attacks when he needs to attack, and that's what makes him him. And he really knows himself and knows his personality. So that's kind of what he does. Again, so this one, AKER, you just notice here where they have kind of these little spots where the volume just kind of dries up and kind of goes down to nothing, and then we get these higher volume candles. And again, it's just something that you want to be aware of, that you kind of notice, that you're saying to yourself, okay, we're getting lower volume here, but I'm noticing that the stock is holding. Maybe I'm going to enter on strength. Maybe I'm going to enter in around this area, or for this case scenario, maybe I'm going to enter risking this bottom of this type of platform, or like bottom that has been made here. It's really up to you, whatever you want to do. But it's just something to keep in mind, again, that sometimes just because the volume has kind of been cut down or been dried up a little bit, obviously there was an offering. I mean, this is clearly front side versus back side, and I have kind of videos on trading the trend and when I stop longing as well. But for this scenario, we noticed that, this is kind of what happened. Again, on THMO, what do we learn from this one as well? We get this kind of action where the volume has been dried up, and then we get this move to the upside. And again, there's two types of traders. There's people who want to kind of bid around here and kind of risk off this area, and there's other people who want to buy into the strength over here. So it's really, again, your type of personality. Again, we get another one right here where we kind of get this drop. A lot of people think that the stock is done. The volume's pretty consistent. It's not really like there's one spot that has been dried up per se, but it's just another thing to kind of be aware of, where the volume has kind of been. This one is kind of an interesting one, where we know that probably most people who are short in between 2.1 to 1.9, this kind of area. So when we start pushing higher and we notice that the volume, this is more consistent volume. Rather, when we're looking at this one where the volume has kind of been cut down, this is more like kind of consistent volume where we're slowly getting that volume ramping up, as well as we're noticing that the price is kind of, these kind of wicks are telling us that every time that the price goes lower, we get bought up a little bit. So that's something also to note. This one again, where we get this kind of SPCB, I know it did get a couple people, where we're getting this push lower, and we notice that the volume has it's been kind of dried up down here in this type of area, this type of range. And I mean, this is a type of scenario where you could either bid on these type of lines in around here, and kind of use this as an indicator, or maybe you say, I'm going to wait for it to get a little bit stronger. Again, based on your type of personality and the way that you want to trade. It's basically the reason why I even made this video is because, number one, it had been requested for me a lot, how do you use volume? And number two, it's basically it's basically kind of how you trade and the way that you want to trade, because there are kind of really two types of long traders. There's the ones who buy strength and they know how to buy it and when to buy it well, and they're kind of trained to buy the strength, and then there's other people who love to buy the weakness. For me, I'm a big weakness buyer. I love to buy the weakness, but I also understand the way that kind of Austin trades, the way where he is saying, okay, this is a moment where everyone who is short is now kind of screwed, and that they need to cover. They're forced to cover because they can't, they don't want to stay in any longer. They're very uncomfortable. And that's something that you can kind of use this in conjunction with a bigger type of plan. So this one's going to be zombie volume. This one, again, it's usually the volume is dried up and the algos manipulate the stock. It's grinding in the upwards direction. And just because the volume has dried up does not make it an automatic long, does not make it an automatic short. You need to use the price action along with the clues, along with the lines, along with the overall trend, really to kind of have that extra edge. Again, this isn't the holy grail. You're going to find scenarios where the volume has dried up and the stock has gone lower, and that's why risk management is the key. It's just if you're using this with the overall trend, the lines, if you're using it as another indicator, that's where it becomes a little bit more powerful than just saying, all right, I'm going to long every stock with dried up volume, because we obviously know that that doesn't work, or people would have kind of, I think, found that out by now, and maybe people even know about this one. But it's just something that you want to be aware of so you don't get shaken out or scared out of a trade and then have something go maybe 50 cents to $1 higher. And then you kind of say to yourself, wow, I really missed that one. So this is kind of just as an added indicator. So AKER, this one, what's kind of different about this one is in the morning we kind of get this fading volume where we had a lot of buying, we had a lot of selling, and by the time we get to around zombie time, my times are actually 1 hour ahead because I'm actually in a time zone that's 1 hour ahead of the market time. So yeah, if you've made it this far in the video, here's a clue. But anyway, so what we notice on this one is that we notice that the volume, yes, it does dry up. We notice that they're kind of drying up the volume down here in order to kind of manipulate it higher. So everyone is afraid to long into this kind of area, and with good reason. I mean, obviously you just don't want to be picking stocks with kind of dried up volume, but what we notice is that the stock is starting to grind higher on this low volume manipulation. And those are really good clues for spotting a zombie play. I know Bao has also talked about this in prior videos as well. I'm sure there are some videos in the daily recap, I think, where he's actually doing a daily recap. I think I watched one where he is talking about how they do this exact same type of tactic, where they dry up the volume to nothing, so it's very easy to manipulate, and then they get it very, higher. And by the time over here it gets to like 12 o'clock, 1 o'clock, everyone's starting to buy. They're saying, oh my God, it's going to 20, going to 30, going to 40. It's the next BPTH. Everyone is kind of saying that, but you can kind of use this area if you're saying, okay, AKER, it should be going lower now, right? It should be going lower, but instead the volume has kind of dried up and it ends up going in the second direction. So you really need to make sure that the price is trending in the upward direction, because you don't want to be too early, but you also don't want to be too late up here. So you use this as a clue to say to yourself, okay, this is one that could possibly zombie. We kind of get this volume that starts to come in, starts to bring the stock higher, and then we get that kind of move to the upside. Neuro, again, this is kind of like a zombie one as well, where again they kind of cut the volume off, but we notice that the trend is going higher, and that's something that is important, that we're using the volume with the actual price instead of just ignoring all the price and saying, well, we're just going to trade off the volume, or ignoring all the volume and saying, well, we're just going to trade off the price. Use both together as a team, use the lines, use everything you can in order to get better. Obviously in this one, you notice that the volume has been kind of dried up, cut off. We're noticing that it's kind of going a little bit higher. Volume again, dried up, cut off, in around here. And then we get this big volume starting to pour in. So there are different ways to long this. I mean, it's really up to you. I can't really tell you the right or wrong way to long these type of moves because there's so many ways that people trade them. You could maybe you're going to buy this type of dip saying, okay, I'm expecting this to trend up higher. Or maybe you're saying, well, I'm going to buy kind of on the increasing volume because I want to buy strength. I think shorts are trapped. So it's really up to you the way that you trade. This one's CEI again. This one was a real tell because I stopped longing this stock around here. I was done with it around here. I did not like this kind of stuff move all the way down here. I didn't like it at all. And I just kind of said to myself, like, no, this isn't one that I want to go long on. So again, look what they do. The volume is kind of dried up, dried up, dried up, and they push the trend higher. And that's something to be where you can use volume, you can use price, you can use the lines, you use all the available indicators in order to make this kind of zombie trading decision. And that's exactly what happened. They dry the volume up, and then boom, volume gets increased. Dry the volume up, and then boom, the volume gets increased. And that's something that you can kind of be aware of. Again, this one, I just thought that I'd include some ones where, just some different types of examples so you can kind of understand what I mean. This one down here, again, obviously the volume is kind of cut off. It's a liquid. People think that the stock is done. They end up saving it, and it ends up going higher. And this is where these choppy ones, where you can get into some trouble, because we have a stock like this where the volume has dried up, but is the trend really uptrending in this situation? No, not really. And that's where you can kind of get in trouble. And this is why I wanted to include this type of scenario, so you can kind of understand that there are going to be some times where you kind of see the dried up volume, but you wanna long on that volume confirmation, instead of something like this where you just end up getting that dump and you're saying, oh my god, I watched Terry's video and I went long and I thought it was uptrending, but I ended up getting dumped on. So maybe there are different situations where you want to long into this kind of volume strength situation, and there are times where you want to say, maybe I want to buy the weakness because I know that the trend is a lot clearer. And it really is up to you what you want to do. It really comes down to the type of context. Obviously, in this type of context where we notice that the stock is getting saved and then we start seeing this higher and the volume start to come in and a lot more buyers coming in, you can say, okay, maybe I'm going to take some strength risking. You could take some at 2.6, maybe risking 2.5, or 2.7, risking 2.5. And I'm not really an advocate for chasing strength, but in this type of scenario where the stock starts to go higher after this type of kind of abnormal move, yeah, maybe it is, something to go on about. And again, we get this volume dried up, but I mean, is it really uptrending? It's really kind of a 50-50 scenario here. Like, I mean, if we're ignoring everything that happened, all this stuff, if we're ignoring that and we're just looking at that, I mean, I wasn't looking to long this because it's just more 50-50. And so then when we get that dump and then the volume starts to come in up here, and we get this kind of pullback, and we're kind of getting that decreased volume again, and we're noticing that it's holding. That's a sign that maybe it is going to continue to the upside. I mean, this one's a little bit harder. This one's a little bit trickier. This is I wanted to include some examples just to show that this one's more of kind of like an art form, and it does take experience to learn some of this stuff, the kind of more advanced types of concepts. So it's just something that you really want to be aware of. This one on works, again, we noticed that obviously we're getting this type of fader volume, and we're noticing that, okay, we're getting decreased volume, the stock's fading, life's good. But then what we notice is that it starts to grind higher, and we notice that the volume is kind of being, dried up again, but the stock is grinding a little bit higher. Those are the best zombie indications, and those are the best types to say, those are the best. Like, if you're short, you might want to, I'd get a little bit anxious about my covers for sure, because I mean, obviously everyone's thinking, wow, this one's life's good, the stock's fading, but when it starts to grind higher and we notice that there's decreasing volume, that says to me, okay, maybe this could zombie. Then you can start using the lines with it. Then you can start, applying proper risk management. Then you can start using all that stuff instead of just using this as a holy grail magic signal. Oh my God, every time the volume dries up, even though it's fading, I'm still gonna go long. Like, you need to apply it with the trend. You need to apply it because they're basically, we see it dry up and then we get this kind of manipulation higher, higher, higher. And that's something that we also want to just kind of use the price action with the volume as well as an indicator. This one, PSTI, again, we noticed that it's kind of grinding higher. I just wanted to show that maybe you can go long on some of the strength once we get buying higher. I don't really trade during this time, but I just thought I would include it to know that all shorts are trapped in this area. I mean, everyone who went short at 420, 430, 440, or sorry, everyone that went short at this kind of $4 area to this 425 area to this, yeah, I guess even, 440, whatever, but everyone who's short and around this area is now stuck. And we know that the volume has dried up, that it's kind of starting to go higher, and we got that kind of explosion of just shorts covering. Again, this one, this one's a zombie as well, where we kind of get this early morning, kind of stock goes up, and then we get this kind of fade. It's unable to break down. We're doing consistently lower volume than we were before over here. Get that move to the upside. Stock comes down. A lot of people think it's done. Around noon, we're kind of getting this. This is why you can't be too early on these as well. Like, even this is kind of like a 50-50 as well. But when the stock pops up and kind of comes down and around here, we notice that, well, we just know that they dry up the volume in order to manipulate these stocks higher, and that's exactly what happens. So it's just something to keep in mind. This one's not like really a true zombie, but just by looking at this chart, I mean, just the volume is significantly lower and the stock is moving significantly higher. So if you're a short seller, it's just another avoid. I know a lot of short sellers will message me and say, yeah, we watch your videos, and we don't watch them because we want to long all these stocks. We watch them because we know what to avoid. So it's just funny when these stocks get illiquid. I mean, they can make down moves quick and they can make up moves quick. So it really depends on your personality and what type of trader you are. So anyway, that brings me to the end of the video. I'm available anytime to message. I do a lot of calls. I talk to a lot of shorts. I talk to a lot of longs. Just really about anything, to be honest. So I'm always available if you have any questions. And yeah, thanks a lot for watching.